Hello, ladies and gentlemen. It is the 28th of August, 2017. Today's market report is brought to you by the Maestro Way. And this is the Maestro here with you today, and let's go ahead and begin. Today's markets currently at about 1:30 Eastern Standard Time are flat to mixed. The dollar is definitely very bearish. You're going to notice if we go to the 30-minute view that the dollar gapped down, more than likely went back up, closing out some stops, and then is headed back lower again. On the one-day view, you're going to notice the downtrend since May 11th is still holding, and you'll notice that it's actually holding right on a declining 50-day moving average. Current price action is not only below a declining 200-day moving average and 50-day moving average, but also what will probably be a declining 20-day moving average. Also, we should have known that something was going on with the dollar for sure right back around April 2017, April 24th, when it gapped down. It did close that gap, however, and has been downtrend ever since. And why do I mention the 24th of April? That trend line that goes all the way back to the beginning of May 2016 was breached. It is now resistance. So I choose that point, and we simply move right back down this line, and that is proving to be very strong resistance. If there are any places where the dollar might bounce, I hate to say it, but unfortunately, you've got quite a ways to go. It is literally sitting just underneath the 200-week average. You'll notice here that there is some long trend support in the 87 range, 87 handle, and then another longer term area in between, right around 79, maybe the upper 77 handle. US oil. Apparently we have plenty of supply. Apparently Harvey has not affected that supply at this point. And you'll notice today that the price is down a decent amount. In fact, if we were to measure this move 48 down to 46, what is that, about maybe a couple of percent and a half. Dow Jones Industrial Average is currently red, sitting right smack dab in between its 20 and 50-day moving averages. You'll notice this resistance trend is more than likely serving as some pressure on the downside, however, still sitting above the 50-day moving average. Moving on to the Russell next. And the Russell chart is actually the one that I think we ought to be watching. And here's the reason why. Sometime this week, there's going to be a decision when it comes to the price action. Yes, that may have already been decided, in that you have a 20-day moving average that already crossed south through a 50-day moving average back about 2 weeks ago, a week and a half ago. But now you have that same 20-day moving average starting to threaten a flattening 200-day moving average. That is not bullish. That is very bearish, ladies and gentlemen. We should also watch support. Currently, right now, it is above support of around 1370, but it's literally sitting just underneath the 200-day moving average. We'll look at the Nasdaq next. It is possible the Nasdaq is forming a head and shoulders, and currently right now is in the head of that pattern. The neckline is 55.95. Be watching that level. where currently the 50-day moving average actually is acting as support. If you're wondering what are all of these boxes right here, these are gaps in the chart. And so we should watch those level. If you are playing options, you may decide to play those levels. Moving on next to the S&P. The S&P is looking more bearish than the Nasdaq in that it is sitting below its 50-day moving average, and you also have a declining 20-day moving average. Ladies and gentlemen, you'll be looking at a silver death cross if that 20-day moving average moves south through the 50-day moving average. This downtrend right here is still keeping pressure on the price action. A lot of gaps, of course, below where you'll want to watch. You're going to want to watch the 200-day moving average, of course. And from a long-term perspective, you can see why that's going to be important to hold that 200-day moving average. So nothing on the horizon that would tell me that the S&P is in danger of a collapse. Of course, you know you can't plan on those events. I'm going to look into Bitcoin real quick, where Bitcoin has actually formed a double top. I've not had a lot of success in charting Bitcoin. Some say it's unchartable. Some say everything's unchartable. I have one rule of thumb when it comes to those who talk about manipulation. Of course you can chart manipulation. Absolutely. But as Bill Holter has mentioned time and time again, be watching at the larger period of time for looking for resistance and support and such. So if you do that, even with Bitcoin, you can see that it is quite possible that Bitcoin could continue to rise from this point. But however, this double top should be something you should be aware of. It isn't collapsing necessarily, but that double top is holding right now as resistance. Moving on to the gold-silver ratio. I watched the gold-silver ratio. It gives me an indication of the price action of silver and gold very quickly if I'm not interested in looking at both, if I don't have the time. So how can you read, if you're like me, you don't have a lot of time, how can you read the gold-silver ratio? Well, it's rather simple, sort of an inverse relationship, not technically, but from a visual perspective. What do I mean? When the gold-silver ratio moves down, as you can see it is doing, gold and silver are moving up. And when gold and silver move up, typically silver moves up at 2 times the percentage of gold. Now, on the other hand, when the gold and silver ratio rises, gold and silver fall, and silver typically falls by a 2-to-1 ratio of gold's percentage. Where do we think this is all going? Well, first and foremost, you're going to notice on the daily chart, the moving averages are moving to the negative side. And from a support perspective, you can see right here, this support going all the way back to the 10th, 2 weeks, is not holding. So that now officially becomes resistance. There are some support levels. Of course, you still have a 200-day moving average, which appears to might be taking a flat course at this point. And there are a couple of other points of support here. But ultimately, it appears that the gold and silver ratio may have topped in the 79 to 1 ratio. Let's go ahead now and look at gold, specifically gold. And you're going to notice gold currently is at the high of the session at 1309, pushing 1310. This is important because it is now officially above the last 2 peaks, which formed a double top and was resistance. And you can see was resistance for quite some time. Moving forward from here, Gold ultimately needs to stay above that 1296. Some will say 13. Now I follow the bid, not the ask. So this price action might be confusing to some. But ultimately needs to stay above and then bounce back up again. You'll notice that there is a long-term resistance overhead, and that long-term resistance is, of course, a downtrend that goes all the way back through the last high on the 26th of September 2012, and then of course going back to the all-time high back in September 2011. It'll be interesting to see if this September, this level around 1345, maybe 1350, can be destroyed. It'll be very interesting. The last high we had was at 1378 range. It'll be interesting to see if gold can move forward from here. At this point, there's not a lot of resistance between here and the last high. We're going to silver. The silver chart, in my opinion, does not look quite as bullish as gold. And I think that gold appears to be fulfilling its function, well, not its monetary function, of course, but its fear function. And of course, you can see silver is also at the high of the day, and of course, does look quite bullish, at least today. We'll have to watch to see if this resistance is able to go down as well. So 1370 would be a place you'll be want to watch. Sorry, I'm having a hard time talking today. Moving on, we're going to look at a few stocks. Amazon. Amazon, the last time its 20-day moving average moved south through the 50-day moving average, the price action moved down 10%. An 8% move from that point, not from here actually, but from this point it'd be about a 6% move, but from the point when the average is crossed would be about 9% and still remain above the 200-day moving average. We're going to look at something that looks more bullish than Amazon, believe it or not, and that is Alibaba. Alibaba currently, its price action is above not only several gaps, multiple gaps, but also above the 20-day moving average. It is soundly above that moving average. Next, we'll look at Facebook. Facebook is clearly climbing down and have a difficult time penetrating this 20-day moving average, which also coincides with a downtrend resistance. However, it still is above the 50-day moving average. Next is Ford. Ford is flirting with its 20-day moving average, happens to have fallen lower, so the 20-day moving average may be acting as resistance. We'll move on to General Motors, and General Motors chart looks nothing but bearish at this point. The 20-day moving average has crossed both a coinciding 50 and 200-day moving average, which is something you rarely see in charts. That is very fascinating. But in fact, however, the price action is still above currently, although GM is nearing the low of its day. A couple of rules that I want to mention that I follow, if you've not followed my work. Rule number one, always set stops. You could certainly, if you were playing gaps, which is a future rule I'll talk about in a minute, you could certainly set some of your stops playing with these gaps, overhead gaps and lower gaps, depending if you were long or short. My second rule is that gaps always fill. According to Dahlquist, gaps always fill 91.4% of the time, which leaves a margin of error of 8.6%. And we all know that if you're playing these triple ETFs, triple shorts, that they are filled with gaps that will most likely never fill. So those more than likely within Dahlquist's data, probably falls within that 8.6% of failure rate. My third rule is to always trade the gaps. So one of the gaps that you would have wanted to have traded today would have been the gap, and you rarely see these gaps, by the way, that occur in the dollar chart, but it occurred today, this morning. And if you'll notice, that gap did fill and then what frankly was resistance. So wide, maybe that was to set off a couple of stops. That's very, very possible. We know that market makers are famous for setting off stops. If you're interested in any of my work, of course, I have my own YouTube channel, and that is YouTube. For the Maestro Way. Please do a search for the Maestro Way. Also, my website is themaestroway.com, and at the bottom you'll notice I have a subscription. It is a free subscription. I'm not sending anything out right now. The eventual goal is to have 1,000 subscribers by the end of September. When I do, I will post all of my charts and all of my videos via the subscription service first. So that'll be a free subscription service to you. If you're interested also, and I've yet to post this video on my Steemit page, I do that as well. You'll notice here a couple of my recent videos are posted there. Also, if some of my interviews or my roundtable discussions end up on other websites, I post those here as well. Sometimes I post other ideas that are of interest at the time. I also have a Facebook page. Please check out my Facebook page. It's facebook.com/TMaestroWay. I also have a Daily Motion page, and that address is dailymotion.com/TMaestroWay. And finally, eventually, I would like to move completely away from YouTube and any other platform and completely move to a Patreon. Well, you notice that I've set up just recently a patron request, and my goal would be that this could potentially all be fulfilled, all of my charts and posts fulfilled using Patreon. Ladies and gentlemen, I thank you for 17 or 18 minutes of your time today. If you like anything that I do, please visit the aforementioned sites. And again, I'd like to thank Gregory Mannarino for allowing me to be today's sponsor of the Market Report. Have a great day.